back with us on the trading desk, and it's time for Fantasy Finance. We're going to recap some picks from past shows, and I think Dave's got a new pick for us. So, Matt, what have you got?
Well, I want to clean up a couple things on my book. I've covered my Toyota Motors.
Covered the short sell.
So we were short that. Now we're going to buy back the stock at a cheaper price.
And you got to close out the pair trade, sell Ford too.
Well, or you can keep the Ford open. It's down here in the $5. You can probably keep that side open. So again, I don't think you've had too much upside on Ford, so you can probably keep that one open for a while. There's not a lot of risk to the downside. I'm also going to sell my Cascade Bancorp that we bought a month ago. That's risen about 12 or 13% in a month.
Got the pop you're looking for.
Got the pop I was looking for, and that's the trade. And
I think that's a good call. I was
thankful too.
Yeah, I was reading the annual report, and just the defaults, delinquencies, and stuff have risen at 1,000% over the past year, and it's going to keep going. And I think their capital adequacy might be brought into question at some point. So in the future, it's pretty concerning.
Yeah, I mean, the regional banks are still they haven't taken. You haven't heard about any regional banks going under for
Wall Street comes
Wall
to Main
Street,
Street.
and that will happen. My final little quick pick here, just because I'm kind of in the camp that I think technology is going to run for a little bit here into the summer months. Although the number, some of the semi numbers don't look good. There's a company called Par3, and they're a networking company. It just went public 6 or 7 months ago. The symbol is PAR, just like par, in golf. And it's
another trade.
It's just another trade. I'm going to buy it here at around $7, and I'll probably look for $8.50 on the upside and be gone again, and I'll be out below $6. So that's my risk.
Sounds good.
Dave, how about you?
I'm going to go back to the world of currencies. Last couple of months, I've been bearish the market. That's been good by being long the SDS, which is the ETF that is bearish the S&P 500. I want to be short the euro, whether it be relative to the U.S. dollar, or probably more appropriately against the British pound. Mm-hmm. But the reasoning is as follows. I think the European Central Bank is way behind the curve in lowering rates. The economic fundamentals are deteriorating there. They're still hung up on inflation, which I understand. But I think if they don't start lowering rates soon, the economy is going to be in a lot worse shape than it already is.
Yeah, and their housing situation is catching up to ours, but is lagging.
Exactly. And then when they start to lower rates, the market's going to realize, oh crap, they're lowering rates. The euro is going to become much less attractive relative to the British pound.
I would agree with that. And this week we've also had another run on the euro dollar up to 159 again, right? So it's almost pushing up to that nice double top.
And we talked about not wanting to fight the trend. This is one where you can actually make a concrete argument. Now, if it doesn't work, it doesn't work.
Right, you've got a very limited
There's a reason
upside
behind it, and if it doesn't work, it doesn't work.
They're both trades.
Both trades, exactly.
Long term. Even though I'm long term bullish on the dollar, I think the euro is going to devalue against the dollar for over a long period of time. But I in past shows I mentioned Citigroup and Moody's. I'm still long both of those. I think they're just too cheap right now. Citigroup's paying you almost 6% just to own it in a dividend yield, and it's based on my calculations about 4 times earnings. So I think it's pretty cheap.
Now Meredith Whitney wouldn't agree with you necessarily still on Citigroup.
Well, the analysts are always wrong at inflection points.
She was right the last time.
They're always wrong at inflection points. When it's another sentiment indicator. When all the analysts are saying buy it, I'm selling it.
Well, now
all the analysts go put sell ratings on it,
and now people know who Meredith Whitney is, and before they didn't. Yeah, that's why her call mattered then.
Absolutely. Yeah, so I still like Moody's and Citigroup. I think they're flatter up a little bit from where I recommended them, and I still like them.
Financials in general are attractive down
there,
don't you?
And that's a good point. There's the XLF, which is the financial spiders.
Exactly.
It's an ETF. You can own all the banks and whatnot via this one vehicle. Mm-hmm. XLF is the symbol. And
takes away the risk of owning a particular name.
I think XLF for someone's portfolio right now is a good investment.
You don't have to worry about individual stock risk. You get the diversification.
Right. Absolutely.
Right. Well, that's all the time we have. Remember, you can send us an email at questions@thetradingdesk.net, and you can watch the show on demand. You can watch any episodes. I think we have all the episodes up now. Rewind, pause, check things that you missed.
Throw fruit.
Exactly. Tomatoes, whatever you got on hand. Yep. So thanks for watching The Trading Desk. Until next time, stay liquid, Central Oregon.